Hello friends, we are now in the final uh, prompting or final learning of our cash flow statement analysis. In this video, in the last 2-3 videos, we understood how to prompt to gather inferences from cash flow statements. In this video, I'll show you the prompting needed to get some cash flow ratios. So ratios, financial ratios are very powerful, which can give deep insights about the company. And only by using cash flow statements, you can gather or you can calculate a few ratios. When you use cash flow statement along with P&L statement or the balance sheet, you can calculate much more ratios. We will see that as a separate topic, not now. So in this video, we will see prompting only using the numbers from the cash flow statement. So this was the prompt. Using the attached cash flow statement, calculate the cash flow based financial ratios. Use a table to show the ratios for both years. The first one is OCF to PBT ratio. OCF is operating cash flow to profit before tax, where we are trying to interpret whether the company is converting its actual profits into cash. Then capital expense coverage ratio. To what extent the capex is covered by the cash flow from operating activities. Then free cash flow, whatever is left over after capex, whatever is left over the free cash flow. Then dividend coverage, if there is dividend coverage, whether it is covered within the uh, free cash flow, I mean within the cash flow from operating activities, or if it is borrowing. Cash flow adequacy ratio means whether the internal cash generation is adequate to cover all major financial needs. For each ratio, what I'm telling is show the formula with values substituted from the cash flow statement, provide the final calculated value, and briefly include interpretation what it means or any red flags. So let me now put this in the chat GPT. So here I'm attaching the Gensol cash flow statement. So it's now making a table. So OCF to PBT, what is the formula and the numbers, whatever it calculated. Numbers are here. Capex coverage, free cash flow. Between capex coverage and free cash flow, it's a very minor difference. One of them you use it as a ratio or the multiples, it's a division symbol. The other one you actually try to see what is left over. It's just a subtraction from the CFO. Then dividend coverage, CFO is covered by dividend or not. There is no dividend paid. So Gensol has not paid dividend, so it has been captured properly. Cash flow adequacy, its formula is cash flow divided by capex plus loan replacement plus interest. So let us see the inference part. Uh, Inference part, poor conversion of profit into cash, whereas it was excellent in the financial year 2023. CFO is insufficient to cover the what do I say, to cover the capex in both the years. Free cash flow was negative in both the years, so when there is no free cash flow, it was not able to pay dividends. It's understood. Then cash flow adequacy, weak coverage, weak coverage for 2024. Then detailed explanation. It will try to explain the formula numbers and interpretation. And red flag. What is the red flag? Especially for 15, 2024, the capex has been, I mean, the CFO was very less and capex was very high. So with this we conclude our videos on cash flow statement analysis. I will soon catch up with you in the next video on more use cases around financial statement analysis or long-term investing. Bye till then.